Hello friends, this is Leo. Welcome to the module 3 of the Pivot Boss Mastery course, where we have seen a couple of modules before. The module 1, we discussed about the introduction of the pivot based trading. And the second module, we talked about the pivot types in depth. Kind of what are the types of pivot? We talked about central pivot range, CPR. We talked about the standard pivots, and we talked about the Camarilla pivots, and we talked about the CPR migrations from lower to higher, higher to lower. And also we talked about the L3 level, H3 level in the Camarilla. And also we talked about the S1 level, S2 level, S3 level in the standard pivots. Okay. And in this volume, we are going to talk about a bit about the volume weighted average price. So what is VWAP and what is this formula and explanation? Okay. So VWAP stands for volume weighted average price. It represents the average price at which a security is traded throughout the day based on the price and volume, both. Okay. So the formula is very simple. It takes a cumulative total of price multiplied by volume and divide it by the total volume. But let's not let the mathematics fool you around, right? Let's key point is VWAP is one of the most powerful indicator in intraday trading. So we got to understand in trading, the volume moves the price. Okay, not the price moves the volume. No, the clear understanding is the volume will move the price, and when it gets momentum, then this process will continue. Okay, let's go and take a look at the VWAP in intraday trading. So institutions and smart money uses the VWAP as a benchmark. So what do we mean by benchmark? So institutions always look for a better trade location. Okay, either be it on the buying side or being on the selling side. So if the price is below the VWAP, it indicates that sellers are in control. If the price is above VWAP, the buyers are in control or they have the edge. So we use the VWAP as a kind of a filter. So the normal formula is we will go long when the price is above VWAP and we will short when the price is below the VWAP. Okay. And this keeps you aligned with the market sentiment. So the VWAP will also act as a dynamic and support. So this is not something like a pivot points, which is pretty static because it arrives at a formula based on the high, low, and the close of the previous day. But this VWAP, it kind of gives you kind of a dynamic support and resistance throughout the day, right? So technically, when the prices touch the VWAP and bounces, that is a support level, right? At the same time, when the price rejects the VWAP from the below, it acts as a resistance. And we will see how the price behaves in the VWAP, and it completely tells the intraday story, right? And we can see that in an example. So next thing is mean reversion plus trade continuation with VWAP. So one of the VWAP strength is how it adapts to both mean reversion and trend strategies. So let's say, for example, if the market is choppy, prices often reverse back to VWAP. Okay? In trending days, VWAP act as a launch pad and price may test it and then continue in the direction of the momentum. We will see all this in examples, right? So what we need to know is that we need to understand the behavior of the VWAP and whether we should know whether we should follow it or fade the particular trade. So another important thing, when the VWAP fail, will it fail? Yes, we got to be aware of it. As you know, there is no tool which is perfect. Technically, a flat VWAP indicates that the market is going to be in a range bound. If the VWAP is flat and your price will keep oscillating around it, and those days it is better to avoid any kind of a directional trades. And this is a warning normally we get when we know that neither the buyers nor the sellers are in control. So what do we do at these days? We would wait for an breakout or we would scalp, right? Typically, when this will happen, when we had a trending day before, right? And the following day would have technically a wide CPR. So in this wide CPR levels, right, we would see that the market would be, bouncing back and forth, range bound, right? And this time, we would know that even during those times, we would know that where to take a trade and how to scalp it real quick. Okay, let's take a look at this example. So here you have this pivot points. I have plotted the VWAP. Okay, VWAP is in this color, which is the yellow color. This is a VWAP. So on this particular day, we have seen that the previous day CPR is a little narrower compared to this particular day CPR, and the price has opened at the CPR. Was trying to take some support at the previous day CPR, and price was in a range bound, right? And the moment we see that the price is above the VWAP, right? This is going to be our launch pad, right? To take a good bullish trade, right? So this is one example. I will show you another example. Okay. So in this example, you can see the previous day CPR is a little wider and market was, slowly trending down, right? And on this particular day, the CPR is a narrow CPR, and we know this is going to be a trending day, right? And if you look at this, you can see that the price was rotating around this, VWAP. It took a support at this level, and then it was rotating around this VWAP for a long period of time. The moment it is stayed above the VWAP for a long period of time, and when it is above the CPR, this becomes a good trending day. So we have discussed about in the previous model, a narrow CPR will always lead to a trending day, but there were so much of confusions around this the initial first session of the trading, and then you can see this, the way it takes off, right? So this is one example on the trending day, right? And also let's take a look at the day where we should avoid any kind of a trading. So the earlier day was a trending day. So we expect the next day would be having a wide CPR, and the market has opened above the CPR. The price is opened above the CPR, and there wasn't any trade for this particular day, right? And this is a 5-minute chart. So you can see that the price was rotating around this day, and we know that the earlier day was a good trending day, and the market would take a pause, accumulate more or distribute more, depending upon the market structure, right? And then, the next day would follow. So by looking at this, plotting the VWAP, we wouldn't be, wasting our time and looking for a breakout, but this could be a good opportunity for scalping. Or if you're an option seller, for example, you would be selling an option on these days, right? To capture a few points, okay? So these are some of the examples that we can see using the VWAP. So it gives a kind of edge in terms of, taking a trade on the upside. And let's see one more example on the downside. You can see it here on the downside. When the price is trending down, right? We know that the trend is slightly bearish, right, compared to the previous day. And the market opened, and followed by that, market was trying to hit the central pivot, TC, and then, below that, it went below the VWAP, right? And this is a good entry point, right, to short this market, because people would have shorted here, but people would have opportunity to short here, and this gives an additional confirmation to trend, take this trade, right? So this is how the VWAP could be used in your intraday trading, and that gives a lot of edge when it comes to the option buying and option selling, or even a futures trading. Okay. So in summary, VWAPs help you to gauge the fair value, the institution activity, and also the intraday strength. Just use it as a campus, right? Whether you want to, take an entry and, exit, whatever the case may be. So it helps you to filter the trades, right? And in the next module, we will show you how to combine VWAP with pivot points for high probability rule-based setups, and especially effective in our market. Okay. I'll see you in the next module. Thank you. Jai Hind. Bye-bye.